Hi there, this is Simon, personal finance coach. With interest rates going up from the lowest rate in 30-year history to 6 and 7%, many people believe that it's not a good time to buy a home and are postponing home buying decision until after interest rates drop. The main reason why this is the wrong way to think about buying a house is that when interest rates start to go down, a lot of other buyers will flood the market, leading to multiple offers, resulting into higher home prices. The high interest rates you pay today is short term, and in the next couple of years, you will be able to refinance to a lower rate. We do not know when the interest rates will go down, but they will go down eventually. And as they drop to between 5 and 6%, potential buyers waiting to re-enter the market will drive the house prices up. Prices will be especially impacted in areas with low supply of housing. You will end up much better off by buying at a lower price, yet at a higher interest rates, and refinancing when interest rates go down. When you pay more for the house, longer term, it will lead to higher payments over the life of the mortgage. If buying a house makes sense to you based on your personal circumstances and your finances, here are the 5 strategies that you may want to consider. In the interim, please subscribe to this channel to get updates on future videos. Strategy number 1 is to sell stocks you own for down payment. The average annual appreciation over the last 10 years of S&P 500 was 13%, and the housing market was 7%. Because of the power of leverage, the 7% appreciation produced 35% return on your 20% down payment. 35% is definitely much more valuable gross of your net worth than 13. If you're interested in the math, here's how it works. 20% down payment on a $500,000 purchase price of a house is $100,000. $100,000 invested in the stock market at 13% results into $13,000 profit before taxes. $100,000 invested as a down payment of a $500,000 house at 7% appreciation results into $35,000 appreciation. This is the power of leverage. Plus, your real estate gain is tax-free of up to $250,000 if you are single, or $500,000 if you are married filing jointly. Strategy number 2 is FHA loans. Consider and check out FHA loans to purchase your home. The main benefit of the FHA loan is that you can purchase a home with a down payment of as low as 3.5%. The main limitation of an FHA loan is that it has certain loan limits and it may come with higher borrowing costs than a conventional loan. Talk to your lender to compare your specific terms of an FHA loan to other financing options. Strategy number 3 is equity share arrangement. If you do not have enough money for a down payment, consider an equity share investment arrangement with someone you know well, like your parents or another family member who happens to have the funds available. The investor may be much better off by investing money in your home as down payment and splitting the increased equity 50-50 when you sell the home in the future. Your equity investor would benefit from power of leverage being applied to your home. Based on a 20% down payment and the power of leverage, if the home appreciates at just 5% per year, that would work out to an average annual pre-tax return of 12.5% for your investor. Many investors would be very happy with that type of return. Strategy number 4 is partnering arrangement. Another option to consider if you do not have enough money for a down payment is partnering with one of your friends to purchase a property together. This could require each of you to come up with much less down payment and better qualification for a mortgage. To avoid any misunderstandings, make sure to document your partnership agreement, including the terms of selling the property in the future at a mutually agreeable time and the split of the proceeds. Strategy number 5, buying a 2, 3, or 4 unit property. Consider buying a 2 or 3 unit property. This approach gives you a place to live and 1 or 2 or 3 units to rent out. You save money on rent and you have tenants pay for some or all of your mortgage. It is an equivalent of having a cash-flowing investment property, and it's an ideal way to start your investment experience in real estate. These are the 5 strategies that may ease your way into home ownership. And this is not counting the obvious additional strategy that comes with increasing your income, lowering your expenses, and accumulating more savings. There is no magic bullet, but it's doable. It comes down to making tough choices to succeed. The bottom line is that it's a good time to buy a house now if buying a house makes sense to you based on your circumstances and your finances. If you cannot afford the house you want, get a house that you can afford. If you wait, the house that you can afford will become even more expensive. Please subscribe to this channel to receive notifications on future videos, and thank you for watching.